Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. Right, so before I get started on the actual today's video, I just wanna quickly say, just press that like button, okay? It will help other brothers and sisters discover the videos, it will help the channel, it will help me. I don't ask anything from you guys other than just that like button, subscribe to the channel so you don't miss anything. And let's get started on today's video. Right, so this is my portfolio. I've shared it from day one. I've been obviously investing based on the kind of value investing, because a lot of the businesses that I bought, apart from couple, Adobe and so on, they have a lower PE and companies that are undervalued and so on. I'm always looking for a discounted stock. So companies that have a great potential, companies that are great business models and so on, that have a moat, that have a free cash flow, this and that. But I'm also looking for companies that have basically that even though they have to have all of the things that I've just said, they still have to be undervalued, okay? And that's what I've been doing from day one. I've been looking at the S&P 500 year to date, and when you look at this and you realize there is literally every single stock in here is actually up, apart from just a few. So Activision Blizzard will be in one of them that I own that in my portfolio, and then it's down 27%, Disney and so on. But then everything else, okay, from Nvidia, that's up 120 something percent. You've got Apple 30-something percent, Microsoft the double, Tesla, good old Tesla, it's been up 51% just this year. That's ridiculous. Look, Home Depot, another stock that I own. I've got 7 shares for months now. I've been trying to add to it, but obviously it's too expensive. Lowe's, again, another company that's too expensive right now. Although I said I'm going to buy a little bit here and there, inshallah, in the next few weeks, okay? Then everything is up, okay? So as a value investor, I'm kind of finding it a little bit challenging to find companies that are undervalued. Having said that, yes, there are some out there, and this is the reason why we want to do this video today. So I think I've got 8 different companies. Okay, instead of doing long video, I just try to make it short. So I'm using this Excel version. Okay, so we're going to talk about these companies very quickly. And if you want to know more about the business, watch yesterday's video where it goes into more details of how to go into more details of each business. Okay, so you know exactly what the business does inside out. Then you can start investing if you are happy with it. Remember, I'm not a financial advisor. I'm only sharing my journey and kind of helping you to, show you some of the companies out there that you could potentially purchase and add to your portfolio. Some of these companies I do not own. For example, Stanley & Black & Decker, I do not own it yet. I might add to my portfolio if I feel like it's actually good value for money in the next few weeks, whatever, you might see it in my portfolio. Okay, so these companies in the industrial sector, they sell almost loads of different products. They own loads of different brands. So if you are, for example, a farmer, if you are building a house, if you whatever, okay, they have products. These companies have different products for different industries and a very well diversified business model. Okay, so if you're interested, have a look at the business model. It's really interesting. Basically currently trading $186 per share. Analyst target price is, according to Morningstar, is $198 per share. TipRanks says $280 per share. That's both of them are basically saying it's undervalued at the moment, and that's the reason I included it in this list. They will pay you 1.69% as a dividend. They have been increasing their dividends, okay, last 5 years. So the average is 5.7 almost, okay, dividend CAGR or compounding annual growth rate, and payout ratio of 29. So out of their net income, they are spending about 29% just to pay off, and that's good. Normally you're looking for something that is below 60-61 kind of thing. Okay, they have been increasing their dividends over 53 years, so this is one of the dividend kings out there. Then you've got dividend safety of 90%, which tells us that dividends are absolutely safe. The fact that the payout ratio tells us as well is only 29% of the net income. So that's business is healthy and is perfect. The next one is Williams Sonoma. This business owns loads of different cookery stuff, okay, household. My wife loves some of their products, okay, and they are a little bit pricey. okay, but they own so many basically house products. And one of the reasons I've actually come across this business is because they own pottery barn as well, okay, which is again for children's and home kind of stuff. Okay, so they have all of these products that are kind of high end. They have children's beds and all that stuff. Okay, so yeah, so that's another business that you can look at. They are currently trading $167 per share. According to Morningstar, it's $209 per share. The price should be basically $209 per share. And then according to Tip Ranks, it's $213 per share. Again, that's quite a little bit of upside if you from basically $167 per share. Now, in terms of their dividend, again, it went down a lot recently, and I think it was something to do with their latest earnings. I think they've said that because of supply chain problems, whatever, they couldn't produce or they couldn't do whatever they wanted to do as quickly as they can. I think that's one of the reasons it was down. Don't quote me on that. Just go to the news section of their website or just Google and find out a bit more about it. In terms of their 5-year dividend growth, it's about 10% or almost 11%, which is absolutely brilliant. Looking about 5 or more, 10% is absolutely brilliant. Payout only about 20%. 15 years of doing this, okay, and they've been increasing their dividends for 15 years, and they have 80% dividend safety score, which is absolutely brilliant. Now, the next one is Chevron. Now, I've got a video coming up about energy stocks, okay, because I'm really interested. I want to find out what people think. I actually posted a sort of a quiz thing on the website, okay, on the community section. So if you can vote, that would be brilliant, okay. There's a couple of people that have actually already voted. I'm interested to find out a bit more about energy stocks because I don't own any at the moment, and I want to know if it's actually something that we potentially should, okay. So Chevron, again, is the oil industry. I'm not going to go into more details. You can find out for yourself. They basically deal with everything to do with oil from basically the moment they dig it out to the moment they refine it, basically distribute it, sell it, all of that stuff. Price, $117 per share. Analyst targets from Morningstar is $128 per share. And then when we look at, in fact, these should be in dollars, not in pounds. Okay, so I made a mistake there. Let me quickly change it. Right, that's better. So $128 per share according to Morningstar, and $135 per share according to 128 and 135 according to these two companies. Again, that's the upside again of, I don't know, for whatever percentage that is, okay. And then you've got dividend yield of almost 5%, 4.5%. Absolutely brilliant. Is a lot. Okay, is probably the biggest that I've seen, probably in this list as well. Okay, dividend growth wise is not great, but when you get in that, why do you care? Okay, payout ratio is slightly higher than we want, which is about 61%. We will be happy with, but 63 is not that far. And then they have been increasing their dividends, believe me or not, because a lot of the oil companies have been down for a long time. So I'm actually surprised they've done this over 34 years. And in terms of dividend safety, it's about 65%. Again, that's safe. Okay, according to Simply Safe Dividend, it's safe. Next one is a MERC. This company is in the pharmaceutical company. They do a lot of HIVs and so on, COVID vaccines and so on. They've got massive pipeline. They're really undervalued at the moment. I own a few shares. So the first three I actually do not own in my portfolio. Okay, would I ever add them? Possibly. Okay, I'm gonna have to obviously do a little bit more digging and find out about each business model a little bit more. But yeah, they are really interesting companies, and you might see in my portfolio in the near future. Okay, you've got MERC here, currently $77 per share, and an analyst target of $94 per share according to Morningstar, and then according to Tip Ranks is $90 per share. So that's again a lot of upside, which is good. 3.5%, almost 3.6% of dividend yield, and your 5-year growth rate of 8%, which is brilliant. Payout ratio less than 50, which is brilliant. 30% of basically increasing their dividend, and 99% dividend safety. The next one is Medtronic. Again, Medtronic is one of those businesses that we've talked about here before. If you want to watch the videos that I've shared with you guys, do it. Just to be transparent, I actually now own 10 shares of Medtronic, and since I bought it, it's almost about 1% up. So I definitely own that, and I own MERC as well. So two business companies that I own in there are also there. Now, this company basically right now is down quite a bit because there was a bit of a news that came out recently. They had some recall, they had some problems with the US government, whatever, the FDAs and so on. So that's going to clear up sooner or later. They have a great business model, so go for it, have a look at it if you want to know more about it. I've done videos on this before, so you can find them on the channel. So $104 per share right now, 129 according to Morningstar, and according to TipRanks, $135 per share. In terms of dividend, 2.4%, which is good. Again, 8 years, 8% of dividend CAGR, and then you've got payout ratio less than 50%, 43 years of increase in their dividend, and 99% safe. So again, these companies, when they start increasing, they actually like that idea. People will buy this stock because of this. Okay, but you also have to think about obviously the good dividend is good, but you need to think about the growth of the business. Okay, and I think it's a great business. That's why I bought a lot more. TSM, again, great business in the tech sector. Really, I absolutely love this business. I own, I think, about 10 shares or whatever it is. I'll share that with you in a second before I actually move on. Actually, 13.7 shares I own right now according to my overall portfolio there. And then currently trading $129 per share, sorry, $120 per share, 143 according to Morningstar, 120 according to TipRank. So that's actually down almost this. That's basically where it should be according to Morningstar, according to TipRanks. Okay, that's interesting. Okay, so they're bearish when it comes to TSM. But according to Morningstar, it should be 143, so they're slightly up. So it's a little bit undervalued maybe at the moment. Okay, you get some dividend, 1.5, 14% growth rate over the last 5 years, and then payout ratio of 45, 1 year of that, and then obviously 62%, which is not bad at all. So the next business that we're going to look at is one of my favorite businesses that I own in my portfolio, and that's Unilever. I'm using the US based because it was hard to find this type of information from the UK websites. Okay, so $63 per share, should be about $69 per share according to Morningstar, and according to TipRanks should be about 63. So that's again one of the businesses that are not bullish on this business. You get almost 4% dividend. Okay, I'm down quite a bit, I'll show you in a second. 5-year dividend growth rate of 7.7 almost. And then you've got payout ratio less than 64%, and then 1 year of that, and then they've been, in terms of dividend safety, is right now 75%. And the final stock that we're going to talk about is the energy sector. Is in the energy sector. OEG, for example, Resources is in the energy sector, $88 per share. So again, they do similar thing to as a Chevron as well. Okay. So they dig it, they refine it, they do all that oil stuff they need to do. I'm going to do a video coming up soon, so inshallah I'll do a little bit more information on these companies. So currently traded at $88 per share, according to Morningstar, $8.93, and according to TipRank is $113 per share, $115 per share rather. Dividend yield of 3.3%. As you can see, when it comes to oil companies, they do pay some amazing dividends, but remember, it's not all about the dividends. Some of these companies are declining, so you have to be really careful. These two, out of all the ones that I've seen, are by far the best, and I will do a video very soon. Okay, right. So 19% in terms of dividend, 5-year dividend growth rate, and then payout ratio of 34, and you've got 4 years of doing that, and 82% safe. I was really surprised. Okay, this is one of the big companies in terms of the energy sector, and 82%. That's quite high. That means it's safe. Their dividend is absolutely safe. Right. I hope you enjoyed that video. Okay, that was just kind of quick to give you some of the businesses out there that are currently undervalued. You know, some of them are industrial sector, consumer discretionary, so it's well diversified. Okay, so when you look at this, you're gonna get confused on what the hell's going on here. But when you break it down and try to find the businesses that are trading below their intrinsic values, okay, because remember, that's what we're after. And according to these companies, they do look for companies that are valued under their intrinsic value at the moment, and that's what we're looking for. So if you're interested in any of the businesses here, then do a little bit more digging, understand the business model, how they make money, where they get the money from, and how they spend, how much they're spending. Find out who the CEO is, if they're buying back their shares, if the company, the CEO, if he is buying stocks of this business. If the answer is yes, then that's perfect. If they're selling it, then that's a problem. So there's a lot of things to look at, but this was just a quick overview to give you some of the businesses out there. I think there's about 8 companies in there, or 7 companies out in there that basically I've just come across it recently. Like I said, some of them I own, some of them I don't. I hope you enjoyed. Please give the video a like. I hope you have a great day and great weekend. Take care. Assalamu Alaikum.